Hello, I'm Adrian Finnegan, and this is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, once unthinkable, the dollar has dropped against all but a handful of major currencies over the last few months. Are Donald Trump's economic policies hurting the greenback? But what does President Trump really want when it comes to the currency? He thinks a strong dollar is hurting manufacturing and American industry. Could he deliberately devalue it? And dollar dominance could be a threat from measures by other nations too. BRICS countries, including China and Russia, aim to move away from the greenback. Will it remain king? It is seen as the grease in the wheels of the world's financial system. The dollar is considered a safe haven when turbulence hits the global economy, even when the US is responsible for that turmoil. That's not how things are going right now. The greenback has depreciated against other major currencies since Donald Trump's inauguration in January. Investors are worried that Trump's tariffs could cause a recession in America, and they've rushed to the exit. So is the president bothered? Trump appears to be of two minds when it comes to his nation's currency. He wants a dominant dollar because it gives the US important geopolitical leverage, but he says a weaker greenback makes American goods cheaper to buy abroad and spurs manufacturing at home. So what does Trump really want? We'll discuss that with our guests shortly. But first, the dollar became the world's reserve currency after the Bretton Woods Agreement in 1944, which established a new financial system pegging the greenback to gold. That's because the US had the most stable economy after World War II, with the largest reserve of bullion. Every currency had a fixed exchange rate to the dollar. Central banks could exchange the greenback for gold. But the US faced a run on bullion reserves in the early 1970s, and the system collapsed. Despite delinking the dollar from gold, the currency maintained its dominance. That's thanks to the strong American economy and its deep and liquid financial markets. But a strong dollar meant American exports were expensive, leading to large trade deficits. To rebalance international commerce, the world's top economies agreed in 1985 to devalue the dollar as part of what became known as the Plaza Accord. After a few years, the dollar's depreciation was halted. Now, the greenback represents nearly 60% of the world's foreign exchange reserves, 54% of global trade, and almost 90% of international exchange transactions. But Trump's policies could threaten that. Some economists say the president could deliberately devalue the dollar to spur manufacturing and reduce the nation's budget deficit. His team has backed the idea of what they're calling a Mar-a-Lago Accord, which is similar to the Plaza Accord, to weaken the dollar. Al Jazeera's Katia Lopez-Horayan has more on Trump's economic plans and their impact on the dollar so far.
The U.S. dollar has for decades been the go-to currency, a safety net in times of economic turbulence. But shortly after U.S. President Donald Trump imposed widespread tariffs, many investors who'd normally rush to the dollar ran away from it instead.
We've always had the government as the safety net for the markets. And that's gone today because the government is the cause of this crisis, which makes it so unique and so unusual.
Investors have long pointed to America's economic exceptionalism, with its reliable labor market and high spending constantly outperforming other markets. But some Wall Street leaders are now sounding the alarm. Tariffs, they warn, could slow investment and consumer spending and damage the country's reputation for years to come.
We have many countries that are coming to negotiate deals with us, and they're going to be fair deals.
Despite Trump's assurances, doubts linger. The dollar is still the world's reserve currency. Trump's tariffs might have been expected to boost it even further, but recession fears are dragging its value down against other major currencies.
American producers will be having to pay more for the inputs for their final products. That means that they'll have to raise their prices on the products. That means fewer people will buy the products, and that means that the factories will have to lay people off. It's leading to the weakening of the dollar, and according to many economists, a much greater likelihood of a recession.
Trump's administration is touting the positives of a weaker U.S. dollar, from making the price of American exports more competitive to helping reduce the U.S. trade deficit. His team has even flirted with the idea of what's being dubbed a Mar-a-Lago Accord to deliberately weaken the currency. Now uncertainty, some analysts say, appears to be the only constant.
we have a market that is throwing a temper tantrum. Frankly, probably rightfully so, when you think about what the street was expecting in terms of a more tempered approach and a tempered narrative.
With Trump's unpredictability on full display, many are analyzing if his economic plans will lead to a new era for the U.S. dollar. If that's the case, questions remain about who exactly would benefit. Katia Lopez-Odoyan, Al Jazeera, for Counting the Cost.
Well, the US dollar's dominance is being challenged by some countries. Many emerging economies have begun conducting trade in non-dollar currencies in what's being dubbed a de-dollarization process. The BRICS nations, Brazil, Russia, India, China, and South Africa, are keen on creating a new currency to compete with the US dollar. Nearly 100% of oil trading was conducted in US dollars until recently, but the era of the petrodollar seems to be fading, as some countries are conducting bilateral trade and are swapping currencies. Meanwhile, China is trying to internationalize its currency, the yuan, and increase its share of global trade. Beijing has also created the cross-border interbank payment system to rival the SWIFT international messaging system. President Donald Trump has threatened countries with 100% extra tariffs if they try to de-dollarize. Let's bring in our panel of experts. Joining us from Henderson in Nevada is William Lee, a chief economist at the Milken Institute. From Johannesburg, we're joined by Arina Murisan, a senior researcher and project manager at the Institute for Global Dialogue. And from London, we're joined by David Lubin, a Michael Klein Senior Research Fellow, Global Economy and Finance Program at Chatham House. Welcome to you all. William, let's start with you. As you heard, since its peak in mid-January, the dollar has fallen against a basket of major currencies. The yield on 10-year Treasury bonds has crept up. President Trump, as we said, has spoken of his desire to see a weaker dollar. So is what's happening right now a result of deliberate policy by the Trump administration, or the accidental fallout resulting from the president's tariff policies? Does anyone in the Trump administration actually know what they're doing right now?
Well, let me try to recharacterize what you just said. The dollar itself actually is at the highest level in the last 5 years. Now, it certainly is lower than where it was at the peak right after President Trump's election, when market enthusiasm about the U.S. and what President Trump was going to put in place got carried away. So I think the dollar is really finding its more natural level. As far as the Treasury market's concerned, again, the 10-year is at 4.25%. Which is about where it's been over the last several years. It peaked at 4.5 for a day or so when there was turbulence in the market because a hedge fund was trying to close its over-leveraged positions in an arbitrage between forward markets and the cash market, a very technical move. But again, there isn't any sign of disorderly markets, and that's really the key. The policymakers are really concerned that the policies in place keep the markets orderly, but the markets will find their own level. And that's really the basis of the international exchange rate system that we have today. We have a floating exchange rate system.
Arina, what do you make of what you've just heard there?
I think what's incredibly striking to me is how the discourse around tariffs, the discourse around the dollar, has two tracks. You have an internal dialogue about what's happening outside of the world, and then you have the outside dialogue. And so what's interesting, especially around the tariffs, is how the US is able to justify its position specifically and what's going to happen to the US economy and kind of externalize the blame. And as we're hearing, is the strategy to weaken the dollar more so that more can buy US goods and compete, for a rationale for why manufacturing needs to return to the US. And so this whole discourse, is not necessarily taking into account the value of the dollar that it, poses when Trump talks about a deficit, the services, tourism. And the biggest export that arguably is being hurt is the export of an American value system, which is persistent uncertainty and creating this kind of mistrust with the dollar.
David, I'll get to you in just a moment. But William, you were shaking your head there.
Well, I think it's a mischaracterization to say that the dollar determines where investors go and where capital flows go. I think the nature of our exports and our competitiveness is determined by more fundamental values than the dollar itself. It's the productivity of the United States economy, the profits you make by investing here, and other economic fundamentals. So I think we're putting way too much emphasis on the nominal exchange rate of two currencies. And when I said the broader basket of the U.S. dollar is still at the highest level it's been in over the last 5 years, I think it reflects the fact that the U.S. remains a dominant economy where investors want to place their money and they want to buy dollar assets.
Irina, I'll give you the chance to come back on that in just a moment. But first, David, is it correct to say that the kind of loss in value that the dollar has experienced in such a short space of time, coupling that with rising bond yields, is more typical of emerging economies and not the world's biggest? Is that why perhaps President Trump rolled back on some of his tariff policies?
Well, it is pretty unusual to see a currency depreciate and bond yields go up at the same time. If the depreciation of the currency is a response to the rising probability that the US goes into recession, then you would normally expect to see bond yields go down in sympathy with the growing risk of a recession. The problem that the US faces at the moment is a problem of what economists call stagflation. In other words, the simultaneous existence of a decline in economic activity and a rise in inflation. And looking at both sides of that, you can come to the conclusion that the dollar should weaken. If the US is going to go into recession, that tends to repel capital flows rather than attract them. And so the dollar weakens as a result of the recession probability. But also because inflation expectations have risen so much in the last few weeks, the expected return that you get from owning a dollar, in other words, the interest rate minus the rise in prices, the expected return that you get from holding a dollar is now negative. And because you have what economists call negative ex ante real interest rates, in other words, the expected inflation rate is above the rate of interest, that also tends to push capital away from a currency. And so that's the reason, another reason why the dollar has weakened. The question is really whether that's all that's happened. In other words, is the dollar's weakness simply a response to this risk of stagflation, or is there something more structural going on? And I think you were kind of hinting at it in your question, because there is within the administration a set of voices, particularly coming, I think, from the Vice President, J.D. Vance, and from the President's, the Chairman of the Council of Economic Advisors, Steve Myron. There are voices that are arguing that the dollar's reserve currency status is a form of what economists call Dutch disease. Dutch disease is what happens when a country sells a commodity, it receives foreign exchange by selling that commodity, and as a result of the foreign exchange inflow, the currency strengthens. But that strengthening of the currency in response to the country selling the commodity, the strengthening of the currency tends to render the rest of the economy, particularly the economy's manufacturing sector, uncompetitive. And so by analogy, what J.D. Vance and Steve Myron have been suggesting, I think, is that the reserve currency status of the dollar, by making so many people want to buy the dollar, has left the dollar structurally overvalued. And that's one of the reasons why the manufacturing sector has been hollowed out. And therefore, the implication is, if the US administration would do something to undermine the reserve currency status of the dollar in order to permanently weaken it, that might help to close the US trade deficit and attract manufacturing capital to the United States.
Okay, let's put that to William. That was the point I was trying to make, William, about whether what we're seeing now is part of a deliberate policy, or whether it's happening just by accident.
Well, let me address that. The manufacturing sector in the United States is about 11% of GDP. It's a very small share of GDP. And I think the plan of President Trump is to try to restructure the economy in a way that diversifies our supply chains around the world, but also tries to restore a manufacturing base that's based on innovation and modern production, not the textile weaving that we had in the 1950s. What we believe the policy of the Trump administration has been is to use the dollar as a lure for foreign investors. So I don't think there's a concerted effort to devalue the dollar. I think it's much more important for President Trump to say the United States is an attractive place to place your investments. We're going to give you lower taxes, smaller government, fewer regulations, and a tariff wall to protect you from unfair competition from abroad. And so I think that is the basis of the Make America Great agenda. And the dollar itself is one of the tools that makes the U.S. attractive. Now, Dave is absolutely right to say that our exporters are hurt, but exports, again, is only 11% of GDP. And most of that, much of that is energy and agriculture. So I think restoring America's manufacturing base doesn't depend upon the dollar. It depends upon showing the world that productivity of capital in the United States is high, which will also make labor productivity high if we get the kind of innovative investments that President Trump's trying to put in place.
Arena, picking up on what William was saying there about capital inflows to the United States, why, given the chaos of the past few months, would anyone want to put their money into the US right now? Is it a safe bet anymore?
I think that's part of the frustration and the kind of grotesque privilege that also comes with being able to decide what happens with the US dollar. And, you know, in the face of intense economic and financial instability that is felt across the world. I mean, whenever a developing country takes out a loan in a US dollar, it's felt immensely in terms of how much they can actually invest in their own social development, for example. And then the US expresses irritation at the desire to step away from the US dollar and use alternative currencies, or rather find other ways in which to create patterns of stability. I think that there's an intense frustration with this, where indeed, look, the US dollar is institutionalized. It's something that holds immense weight and immense certainty, but when it becomes incredibly politicized, that creates a frustration as well amongst everyone who uses it.
David, are we witnessing the beginning of a dollar crisis? I've seen a lot of commentators writing about a dollar crisis just lately. Perhaps you'd explain to us what one is and whether this is the start of one. Is the dollar about to be dethroned as the king of currencies anytime soon?
I think it's very important to make a distinction between the level of the dollar, in other words, the value of the dollar vis-a-vis other currencies, and the role of the dollar, the status of the dollar. In other words, the dollar's sort of the way the dollar is valued or the way the dollar is respected and used internationally. So the level of the dollar and the role of the dollar are quite distinct conceptually. As far as the level is concerned, I would go further than what Bill said earlier. It's that in trade-weighted, inflation-adjusted terms, the dollar is now pretty much close to being stronger than it has been for the last 40 years, let alone the last 5 years. And so it would be quite natural for the dollar to go through a multi-year cycle of depreciation, since we've seen these many times in the past. In the decade beginning 2002, for example, between 2002 and 2012, the dollar fell in a pretty much straight line by around 30% in trade-weighted, inflation-adjusted terms. And so it's, you know, the dollar goes up and down all the time. As Bill said, it's a floating exchange rate. But historically, those ups and downs have not really affected the status of the dollar. But I think we're now entering territory where the level of the dollar and the status of the dollar might be coming closer together conceptually. And that's because, as I said earlier, there are voices within the administration that seem to express the view that it would be worth undermining the status of the dollar in order to reach a weaker level for the dollar. And the kinds of tools that have been discussed, imposing capital controls, levying taxes on foreign owners of US securities, adding additional reporting requirements or quantitative restrictions on foreigners' ability to own dollars, or, for example, if the US unilaterally cancelled the swap lines that it has with other central banks, these would all be tools by which the US could undermine the reserve currency status of the dollar. And all of these tools have been discussed, not only, well, some by members of the administration and some by economists sympathetic to those views. If the dollar's reserve currency status is, if you like, deliberately trashed by this administration, then I could easily imagine what starts off as a depreciation of the dollar that one could understand as being normal does become a kind of dollar crisis, because our entire international monetary system is built around the dominance of the dollar. So if the center of the system, if the United States starts to undermine the dominance of the dollar in pursuit of a weaker exchange rate, then I think that there could be some kind of crisis, because we're in that world, we'd be in a form of international monetary anarchy that we haven't really been in since the early 1970s, when President Nixon disconnected the value of the dollar from gold.
Let's broaden this out slightly. William, the president seems to be concerned about BRICS nations and their threat to de-dollarize and start their own currency. He's threatened 100% tariffs on BRICS nations if they were to do that. I mean, what weight does his threat carry? Would that be enough, do you think, to deter BRICS nations?
No, I think the BRICS and other countries will use whatever currency is most convenient for them to do their transactions. Some of the BRICS countries have decided to use renminbi for bilateral transactions with China because they want to settle in renminbi because they buy stuff from renminbi. The role of a currency in international exchange depends upon the provenance of the underlying economies, exports and financial exports. As David well knows, the British pound, right, was the true reserve currency for centuries. And I think one of the things that you have to realize that the US dollar, the prominence it has is because of its role as the major economy of the world still, with a lot of competitors. And BRICS are looking for alternatives because there are competitors out there. The euro is used for local transactions and a broader set of transactions around the world, not as much as the dollar. And digital currencies are offering a challenge. So I think President Trump recognizes that the United States earns an enormous amount of advantages and rent, as they call it, on the fact that the dollar is used for transactions around the world. And I don't think the president is going to jeopardize that. What he's, I think, trying to say to people is, if you choose to use something other than the dollar, then it's going to be costly. And one of the things that he's going to try to put are more costs to moving away from the dollar, because he recognizes the advantages of using the dollar, which, by the way, undermines all the earlier arguments that the U.S. is trying to get rid of the U.S. dollar as a reserve currency. So you can't have it both ways.
All right. Irina, how serious are the BRICS nations about wanting to de-dollarize? Have they had any success with pushing for their own currency? Could they come up with a sound alternative to the dollar as the reserve currency?
As in one word, no. So absolutely, there has been a lot of talk about BRICS currency being created over the last few years, but it's actually slowed down quite a bit over the last year because it's incredibly tricky from a technical point of view, and this also relates to the status versus the level arguments of what currencies propose and what the role that currencies play as well. And it would be incredibly difficult to create a particular BRICS currency, because which reserve bank are you going to geographically link it to, essentially? If you wanted to hold that much power, that much weight, essentially. And there's a lot of talk about, does China want the renminbi to be the potential challenge to the US dollar? But even then, when you think of the practicalities, investors don't like that, they won't be able to get their money in and out of the country as they please, specifically, if they compare it to the US. And yes, often, China actually devalues the yuan, to keep its exports competitive at the same time. And so it would imply a massive rebalancing of international trade without, the world's current reserve currency, and the US wouldn't import so much, which means, it wouldn't be so dependent on Chinese exports. And China quite likes that. If you link it back to, the tariffs argument and how the US has threatened 100% tariffs, essentially. But when you come back to a BRICS currency, you don't have a unified central bank. You have immense ideological diversity. You have distrust and competing interests. I mean, something that a lot of people overlook about the BRICS is that they are inherently competitive. They don't necessarily want one to have power over another.
David, let's look into a crystal ball for a moment. If we were having this conversation in a year from now, 2 years from now, at the end of the Trump administration in 4 years' time, will the dollar still be the world's reserve currency? Could the world survive without the dollar as its reserve currency?
I think it's worth bearing in mind that the distribution of global currency power changes much more slowly than the distribution of global economic power. In other words, it's much easier for China to occupy a dominant position in the global economy than it is for the renminbi to occupy a dominant position in the international monetary system. And the reason for that, well, there are lots of reasons for that. One is that currency power ultimately, to paraphrase Chairman Mao, grows through the barrel of a gun. The top currency tends to be printed by the top military power. And that's just a kind of historical truism, I think. And that helps to kind of preserve dollar dominance. Another factor, I think, that helps to preserve dollar dominance is what you might call inertia. If you think about the way we all rely on the QWERTY keyboard, it's possible to imagine us having a different kind of keyboard, but it would involve a lot of cost for the world to migrate away from the QWERTY keyboard to something else. Equally, it's very costly, but not unimaginable, to move away from the dollar to something else. And because of that inertia, because of those network effects, the difficulty of moving from one system, a dollar-dominated system, to another kind of system, I think within the time frame that you suggested, the dollar is still likely to be dominant. But the chances of a weaker dollar seem to be relatively high, given the rising probability of a US recession and given the rising probability of a stubborn inflation problem resulting from the tariffs and loose fiscal policy in the United States.
All right, there, I'm afraid we're going to have to end it. We could talk about this all day. It's been fascinating. Many thanks to you all, William Lee, Arina Murasan, and David Lubin, for being with us on Counting the Cost today.
Thank you.
Thank you.
And thank you for watching. If you'd like your say on the dollar debate, you can tweet me. I'm at A Finnegan on X. Please use the hashtag AJCTC, or you could drop us a line. Countingthecost@aljazeera.net is our email address. There's plenty more for you online at aljazeera.com/CTC. That takes you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. But that's it for this edition of Counting the Cost. I'm Adrian Finnegan from the whole team here in Doha. Thanks for being with us. The news on Al Jazeera is next.